An urban renewal area has an income source, expenses, and a spending limit. The income source is the yearly property tax collections from the increment. The expenses are either the projects and programs pursued or administration. Maximum indebtedness is the total amount of money that can be spent over the life of an urban renewal area on projects, programs, or administration. The following set of graphics illustrate the process of calculating the division of tax revenue for a single property. The graphic shows a hypothetical property tax bill for a property in the City of Newberg. The property has an assessed value of $100,000 with a property tax rate of roughly $13 per $1,000 of assessed value. The owner of this property would pay $1,290.67 in permanent rate property taxes. In the following year, the assessor is permitted to increase this amount by 3%. Increases in assessed value above 3% do not occur unless there is new construction or substantial rehabilitation. The increase results in a property tax bill of $1,329.39, an increase of $38.72. As this slide is illustrating the difference between the current and prior year's property taxes, assuming no urban renewal area, the taxing districts all receive an increase in revenue proportional to their tax rate. Differences between the green column and the blue column in this graphic show the division of taxes concept. If this property was in an urban renewal area, the 3% increase of $38.62 would be allocated to the urban renewal agency instead of the other taxing districts. The total property tax collected for both the green and blue columns is the same. However, the 3% increased revenue has been redistributed to the line item urban renewal. The property taxing districts still receive the revenues from the frozen base assessed value, as mentioned earlier. Again, I would like to emphasize that the total taxes for both the blue and the green columns have the same financial impact to the property taxpayer, regardless of whether an urban renewal district is formed. The impact of urban renewal is on the taxing districts, not the taxpayers. The assessor must calculate the difference in current assessed value and frozen base assessed value the same way we have just shown for each property in the urban renewal area. This value is multiplied by the aggregated tax rate to determine the amount of property tax revenue redistributed to the urban renewal agency. How the assessor collects the urban renewal agency's revenue is the most common source of urban renewal misconceptions. Statutory limitations on property tax collections require that urban renewal revenues be collected from the entire city or county in which the urban renewal area is located, not just the properties inside the urban renewal area boundary. The source of revenue is still from increases in property taxes for each property, and the impact is still on the taxing districts. Again, the impact of urban renewal is on the taxing districts, not the taxpayers. To summarize, urban renewal division of taxes does not increase the property tax bill. It uses the increase in taxes from the time the urban renewal area is established to fund projects in an urban renewal area. If the City of Newberg adopts an urban renewal plan, urban renewal will be a line item on the property tax bill for all properties in the City of Newberg, regardless of whether they are in the urban renewal area. No bonds or local option levies would be impacted by the potential urban renewal plan. The next steps in the planning process for the City of Newberg are for the Citizens Advisory Committee to continue review and provide input on the planning process, with meetings scheduled for June 8th and June 29th. The city will continue to provide information on the city website and to plan for community input. The feasibility study will be presented to the City Council on July 20th. For more information, contact Doug Rux, the City of Newberg Community Development Director, at 503-537-1212 or doug.rux@newbergoregon.gov.